Hey guys, what's up? It's your boy Crypto Marco yet again with another awesome video on the topic of cryptocurrencies. The currency your friendly bank employee from around the corner advised you against investing because he said that buying financial products is the way to go. And this is actually a serious financial product sprinkled in with some cryptocurrency magic. It's the Bitcoin future that everybody's talking about right now, and it has been launched, and today it's it has been released. We're gonna see at what it is and how it's affecting the Bitcoin prices. But if you enjoy this video, make sure to leave it a thumbs up. That'd be really great and make me really glad. So I hope that you enjoy this video. I'm really thankful for you being here. And if you want to win a little bit of Litecoin, comment down below and you're participating in the raffle. So good luck, and let's check out the Bitcoin futures. So as you can see, the financial product called future has been launched, and you can trade it on CBOE, which is a big future exchange in Boston. And before I get into the whole topic, I think it's essential to know what a future is. So a future is a financial product which allows two parties to exchange an asset at a set price at a guaranteed future date to exchange. So for example, say this is, I don't know, these chewing gums, they are, I don't know, like oil. This is like a barrel of oil, and I make a contract that I will buy in 1 year. I will buy a barrel of oil for $100 because I don't like the fluctuation of the market and I need that oil. I depend on it. So I make a contract with, for example, CFE in Boston, and I tell them, okay guys, in 1 year I will get this barrel for $100. So what happens when the price fluctuates? In case the price of, one barrel of oil is $200 at that time, I made a pretty good bargain. But if the price drops and 1 barrel of oil is $10, I'm making a huge loss. So when you're talking futures, you're always talking of one side profiting and the other side making a bad deal pretty much. And this is what's happening with the Bitcoin futures. So people are pretty much betting on what the price will be at one day. And futures are traditionally traded by professionals, investors, and firms. They're futures pretty much based on everything. So like I just said, oil or corn or other commodities, everything can be transferred into a future. But in some cases, when the future contract settles, the buyer of the contract can receive gains of the product itself. So I could get like some oil or some corn or cash also. And in the latter case, that is referred to as a cash settlement future. CBOE is claiming that the launch of this future does come with some great advantages for cryptocurrencies and everybody investing. So more price discovery and price transparency. So you won't have it won't be so hard to find the price. Sellers and buyers will be able to find the price quicker. An exchange listed, regulated, and surveillance Bitcoin product. So since the CBOE has been doing this for decades, they're obviously regulated and they have to the state is regulating them. So the probability of getting like when you're buying a CBOE product, you're not buying something that's fraudulent or something, because they're so heavily regulated by the US government. A risk management tool for cryptocurrency holding participants. So you can make when you're making a future contract, when you can bet on prices that won't hurt you a lot if you make a loss, or you're basically securing your risk management goes up. And that's very interesting for all the people who have a lot of Bitcoins, because they could make contracts that they are gonna get the price that Bitcoin currently has, or maybe even a little bit more, in case that the famous bubble bursts very soon. Access to the Bitcoin sector without digital wallet requirements. So even though if you're watching this video, you're probably into cryptocurrencies, into Bitcoin, and you know exactly where to buy Bitcoins, how wallets work, and what the blockchain is, etc., etc. But private people, average Joes out there, they're just not familiar with Bitcoin and blockchain technology. So they need somebody who does that for them. And from now on, institutions and also wealthy people, investors, have the opportunity to buy Bitcoin without having to do the annoying verifying process of, for example, Coinbase or Kraken or whatever, and then transfer those Bitcoins. So all they have to do is like call their fund manager or whatever, their trader, and be like, hey dude, I need some, let me get some of those juicy future contracts, and that's pretty much it for them. Settlement directly to the Gemini Bitcoin auction price rather than the average price. I don't know what kind of, like, in my opinion, this is not really an advantage, but maybe it's just, you know, some point they are trying to make. So they will use Gemini as a reference for the price and also other exchanges. And as you can see, the futures have already been trading a while. This is the January 8th future, so quite a lot of volatility. The February 8th future didn't do a lot, and the March 8th is also looking kind of boring. Not a lot happening here, but you can see we're getting the first data, and you know, people expected a lot from the Bitcoin futures, that the price is gonna go up or the price is gonna go down, but for now at least not a lot has happened. So most of the people who want to, like institutions especially, who want to get into Bitcoin are very careful, and they don't want to put their billions of dollars into one pot and just see what happens. So as you can see, the Bitcoin price did go up, but not that much. So whoever thought this would make the price explode, right now not a lot is happening. Probably you're going to see a side trend right now, not a lot happening, and then eventually it's going to peak somewhere again, and then crash, and then side, and then peak. And you know, I've talked about that pattern in a last video of mine. And basically, as I said, the futures allow investors to bet on future prices on the glowing coin. The product is traded under the ticker XBT, and CBOE will be waiving all transaction fees until the end of December, which is kind of interesting, probably some kind of incentive for people to get in. The futures are also settled in cash, so they're not settled in, you know, the cryptocurrencies we know, like on other platforms. That means that traders can speculate on the coin without actually touching it, which is for many people probably really good. And traders will have to put some money on the table first. Since Bitcoin is so volatile, traders of CBOE Bitcoin futures are required to have at least 44%, which is a lot, because usually the settlement is kind of, you know, 10% or something when you're doing future contracts. So that's huge. But think of them as a down payment for risk. And then what are some concerns on the Bitcoin futures? Well, first of all, some people do not believe that the underlying Bitcoin market is mature enough for a future market. Might be true, might be not true. Although the maturity of a market, just because it's young, doesn't have to mean it is not mature. The market is unstable, with Bitcoin stock markets under pressure and prints extremely different prices as trading volume rises. Definitely true. The market is really super unstable and volatile, and of course hacks and security problems are also common. So what happens if all the exchange platforms that are functioning as a price index for the CBOE get hacked? So we don't really know, because hacks are happening quite often. Like, you probably all know that Mt. Gox, the biggest exchange platform in the year 2013, got hacked, and Bitcoins that are worth today like billions of dollars just were hacked. So that's something that's definitely damaging the reputation of Bitcoin. But something that's far more concerning, in my opinion, is that the price is, while of course the market is kind of predicting the price, if we take a look at this nice article, the chart reveals the Bitcoin centralization of Bitcoin wealth. You see that a lot of like these pieces represent the percentage of wallets, like how many people control Bitcoin. And if you just add all the pieces up together, you will see that very few people control a lot of the Bitcoin. And at the end, these are the guys who are making the price. So Bitcoin is not as decentralized as you think. These wallets might be miners, might be cloud mining services who got in early, who knows. But as you can see, all of these blue pieces pretty much make 95.8% of the whole market. And you can see that on bitcoinprivacy.net /rich list. You can see that there's the biggest Bitcoin account has 100,000 Bitcoins, like a lot more than 100,000. And that's at the moment, that's like $2 billion. So quite insane. I think you could it would be enough to survive $2 billion. But at the end of the day, I think the big influence of the Bitcoin future is going to show itself over time. Right now, it's too early to actually say if Bitcoin price is having an influence. But from commodities, we know that commodities that are available on the future market, the prices are a lot less volatile. So this might be, for some people, for day traders, for example, that's probably not that great. But for somebody who wants to invest and doesn't like volatility, this is a good thing to do, because the futures tend to take out the volatility of most markets. And I guess that's pretty much all I had to say about the Bitcoin futures. I hope you enjoyed this video, and I hope that I will see you very soon again. Don't forget to comment with your Litecoin address, because among everybody commenting, I'm giving away a small amount of Litecoin. Thank you so much for watching this video. Really appreciate you being here. Also, make sure to leave a thumbs up if you enjoyed. Subscribe to my channel, hit the notification bell if you want to see a notification every time I upload a video. And I wish you a lot of success, a lot of health, and see you soon. Bye-bye.